Hi everybody, it's Mark here at Teslary, and Tesla closed green today, just slightly, $254.92, or a dollar per share from yesterday's close. In percentage terms, 0.39%. And it is going to be the day before earnings, so this video we'll talk about earnings real briefly. And I think the first thing we want to do is just look at kind of the price action that we experienced today, opening with a really low gap. And let's see, just do a quick measurement to see how far we drop intraday. And it was almost 3% at the open. Now, the market was kind of selling off in the morning because of why retail sales numbers beat again. So the idea, there are certain times in the past 2 years that if economic data comes out too good, then the market thinks what? The market thinks that the Fed won't cut rates, which means what? Then the market sells off. But the market generally recovered from the S&P 500 closing just flat and Tesla closing slightly green. And I think that's relatively expected because you can't sell forever, right? Like if I was to ask you, how are you feeling over the past couple weeks about the market? And most people would say it's pretty bad. If you look at the fear and greed index, it's pretty bad. If you look at how oversold things are, I mean, they're generally pretty bad. And if you look at positioning for like CTAs, they're not very well positioned. But they're using opportunities like this when there is a sell-off in the morning to easily add to their position because they're so underexposed to the market. Now, being underexposed to the market for these CTAs could be a good thing where you can find some, pressure to the upside instead of all the selling pressure that you're seeing. What's happening with Tesla though, you got to wonder, they never want to give it to you easy, right? So if I was to zoom out a little bit on the chart, you're basically right in the middle. We haven't really gone anywhere in the past 2 days, and we're right in the middle of what our quote estimated move would be for the week, which is greatly expanded because of earnings coming out tomorrow night. Now, I would say this with a caveat, and I'll go over to the browser and kind of show you what I'm talking about. It kind of gives you a good idea of what you're fighting against when you're trying to trade Tesla. So if you're investing in Tesla, maybe this doesn't matter, but it could matter in the sense of maybe if you want to hedge your position at the open, at the open on Thursday, or if you can do something about it after hours by going inverse Tesla or going, short selling Tesla to hedge your position. This website, which I do not have a premium account for, but it kind of gives you kind of an understanding of how the game is set up against people who trade Tesla. Now, you can see up here in the top right-hand corner, and I'll read it to you. The options market has overestimated Tesla stock earnings over half the time, 58% of the time in the last 12 quarters, meaning that the market believes that a move is going to be this large, right? Like maybe whatever percentage, 8, 9, 10%, but usually the move on the day after or at the night, basically it's really the day after, isn't as big as what they thought it would be it up or down. And the predicted move after earnings announcement it was, plus or minus 7.6%, but the actual move was always lower, on average being 6.3%. So we talk about like volatility crush. And the volatility crush means that if the price of the stock isn't moving, past this predetermined estimated move, then your option is going to become relatively worthless the day after earnings, because it's not a big enough move, because it's not like market makers don't want to lose money, right? They want to have a little bit of they want to skew the chances of winning onto their side. The house will always win, right? And this kind of gives you an understanding of what this is. So the average implied volatility crush for Tesla's earnings over the past 3 years has been around 12%. Now, you might see people talk about, well, the estimated move, Mark, I've heard it's around 5% for this earnings or 4.7% for this earnings. I'm like, that's great. I mean, that's fine and all. But the reality is, most of the time when it comes to Tesla's options, without the move being somewhere in 11%, it's not even worth it. Maybe a move at 8% or 9% or 7% might make you break even a little bit, or maybe make it a little bit of money. But is it really worth buying an option that might cost hundreds of dollars to kind of make a little bit of money? Where sometimes it's better to buy the option the day after and ride the momentum downwards or upwards. And we'll see we'll look at last quarter, and you can see how Tesla loves momentum, right? It really loves going away. one way and it's going that way for however long. And we've seen it in May, right? We saw it in May when it goes up forever. And we've seen it in July where it just goes down forever. So they're estimating a volatility crush of 17%. But we know that a lot of short-dated options, right? A lot of short-dated options for Tesla ending this week are over 80% at 100 points of the day of implied volatility. So to crush it back down to a normal IV, which might take a couple hours for it to settle after on Thursday morning. So buying at the open on Thursday would be pretty problematic if you're buying an option, because the implied volatility hasn't had the opportunity to crush yet, meaning come in and get lower. So what I would say this as well: if you caught yourself in a trade, right, and you're sitting there on Wednesday night, you're like, oh my God, this didn't go my way. Just know that right at the open, you'll have that volatility still. This is not financial advice, but it could give you the opportunity to get out of a trade with just something, or getting into a trade isn't ideal because the volatility will start crushing immediately thereafter, coming in, basically lowering the innate value of your option that you're holding. But anyways, so the volatility crush, the numbers that you don't want to look at, it's not the 17%, but you want to look at what the normal volatility is. And they're saying that it typically gets down to these high 40s, which is about right. During, non-eventful weeks, maybe you see IV somewhere around, 48%. But with certain options, like I said today, somewhere in the 80s. And does that mean that volatility will crush 25 to 30%? I mean, probably so on short-dated options that you might be holding. So this is just some information that might help you depending on what happens tomorrow. Now, Gary Black, he's been selling Tesla. You know what? I'm not going to comment on that, but Gary likes to describe himself as a Tesla bull, and that's fine. If he wants to, I don't have a problem with that. That is just, anyone's definition of bullishness is going to, I'll leave it up to them. But he's been pretty bearish in terms of how he talks about Tesla and the outlook, to the point that, like I mentioned in the first part of this a little bit, that he was selling Tesla to buy Rivian because he believes the prospects of Rivian and the pricing on the shares were just a little bit just more fairly valued. But it was really nice of him to provide sell-side analysts and IR consensus for Tesla's financials that are coming out tomorrow night. Now, the consensus means that Tesla's investor relations person, Martin Viecha, he's actually going through the really popular sell-side analysts and picking the ones that he believes are done with good faith, and he compiles them for the investor people of the world. And he puts the kind of the median and average numbers here for us to see. And Gary was very nice of us to actually show us this more privileged information. The numbers you kind of want to look at is the adjusted EPS for the third quarter. Now, I know last week we talked about it being around 76 cents a share, but we also talked about it last week where, due to all the price cuts and EPS revisions, that would be coming down. And it did. So you can see here in his tweet, it's 72 cents per share. And that was revised down over the last couple of weeks. It was just coming down and down. And that's generally good because I guess easier to beat the EPS if that is happening beforehand, unlike what happened with deliveries and production numbers, where analysts weren't really keeping track of the company, and they just kept their numbers the same for the whole quarter, which eventually showed a miss based off consensus analyst expectations. Another number we want to look at is the gross margin. So gross margin is 17.7% as far as the average and the consensus. You can see it right here in this part of the chart, 17.7 for the average, 17.8 for the median. So some people even in the Tesla community are thinking lower numbers than 17%. Now, Gary Black has his at 17.1%, so he's lower than consensus. But we also have people that, when it comes to EPS, that there's more bullish people, obviously, are around 76 to 80 in that range. And another thing I want to throw out there for you guys is Tesla never really misses when it comes to EPS estimates. Usually they beat, even if it's by 1 cent. And you saw that, the last couple of quarters, they're going to beat it somehow, some way. And I think one of the clues that EPS will be beat is what they did with full self-driving, the description on the configurator, where, steering on city streets was moved into like what is, available when you purchase this product, not a coming soon quote feature. That is what possibly is going to push them over when it comes to earnings. I think that's something that the realized the revenue on that is going to be the thing that we really need, and that's why they did what they did. They knew from the get-go they needed something, right? And there's always kind of these one-off financial figures that you see in Tesla's and really any other company's financials that just kind of pushes them a little bit over the edge. And I don't think there's anything wrong with that. But really what we really want to see is, cost of goods come down. We want to see operating margin kind of, stabilize, but really kind of go up a little bit. And maybe that comes at the expense of auto gross margin, and we're finding other ways to kind of boost our operating margin, because they're the ones telling us that's the figure that they care about, operating margin. That auto gross margin is not really a huge concern, and even free cash flow is not really even a huge concern. But yeah, I would say the figure for free cash flow coming in around $2 billion, regardless of whatever, happens tomorrow. I've been saying this in videos, and I've been saying this, that, when it comes to how Elon sees free cash flow over the past quarter or two, when he's seen, the advancements in AI on a perspective that we can't see, he's seeing it behind closed doors. And he probably knows more about AI than most of us do. I think the investment they're putting in factories and AI, compute, building out bunkers and data centers, it costs a lot of money. It costs a lot of money. And, we also haven't heard about the Cybertruck yet. And if they release the Cybertruck details at the beginning of this call tomorrow, which they've done at certain calls when they talk about products, I would say that you got to kind of prepare yourself for, well, I guess you really can't, because it would have come out by the time the call happens. But in my mind, I think free cash flow is now just being used as a tool to advance this company's technological prowess, really. And that's going to be really based on compute. I think that they're going to be spending a lot of money. There is whisperings out there in the world too that, this could be an opportune time, depending on how the reaction of the stock is, to raise capital. Now, you might say that doesn't make sense. Like, they have $23 billion last quarter, and they could have $24 billion this quarter. Why do we need to raise any money? But just know, like I know this would be really ironic and almost ridiculous for me to say, but yeah, I mean, I make videos talking about how Rivian, Lucid, and all these other companies are raising cash, or Ford and GM are opening lines of credit, but they're doing so, already losing money. But, Tesla doesn't really lose money. But this could be the opportunity to get more capital to push that lead they have on these other startups and OEM car makers. You want to keep hurting them, and they've been doing that with price cuts. And you see the reaction to that with, how people in Ford and GM are treating their EV pickup lines, right? Where they're seeing pressure, and the Cybertruck isn't even out yet. And you're seeing these new cars come out from, Polestar or Kia, and the prices are like out of control compared to like what you can buy a Model Y or a Model 3 for, right? And the reason for that is because he's using free cash flow. He is using margin, Elon is, as tools, as like those are his weapons in his war. So if you want to say, use the word price war when it comes to EV pricing for Tesla, it's really he's able to use that as a weapon because other people can't. When Ford reduced the price of their F-150 Lightnings by $7,500, it wasn't because they had a bunch of excess margin that they can play with. They had no margin. They're losing $60,000 per vehicle. When Rivian wanted to raise prices last year but couldn't, when Lucid wanted to raise pricing but couldn't, it's because they don't have any margin to play with. And that's where, Elon comes in. So the reason I'm saying this is because, for me, how I'm preparing myself mentally is that, okay, that could be lower than expected, meaning free cash flow could be much lower than expected because they want to spend money investing in the business. We've gone through periods in Tesla stock where the price hasn't really, if you just, zoom out, there are periods for years where pricing goes nowhere, right? I mean, when you're living it every day, the volatility is, tough to swallow sometimes. But if you go back through, from, when they went public to like 2000 and like, 15, 16, then you go from like 2014 to 2019 and 2020 to 2023, it kind of feels like you're just treading water. You're not going anywhere. Because he's looking to push you to the next level, right? So maybe one day it's, look at all this production and then we're not losing so much money and like we're making the Model 3. And cool. Maybe the next moment was, look guys, we're actually making money and look at the volume on Model 3 and this is the Model Y. Boom, stock was up. Or look, we realize AI and then stock goes up. But how many years does that take? Like we can feed each other lines all the time about, full self-driving is supposed to come out by the end of the year. Elon told me, but he's telling you that for years. What I'm saying is that's the motivation. That's why he's using all the money, because that's what gets you to the next valuation level of, oh, this company is worth, $1.5 trillion. It would never be worth $1.5 trillion if it's just making cars. How do you get to the point where you're a technology company who happens to make cars and that's spending money on compute? That's so if you want to talk about, when people talk about earnings previews, they go through charts and they go through an Excel sheet and blah, blah, blah. And this is what happens when I'm just saying that you can take the little tidbits that he talked about last quarter's earnings call, and he laughed when he said, I'm surprised we were free cash flow positive in the first place. We just want to be free cash flow positive at all. Meaning that if he was $1 free cash flow positive, perfect, he wins. He's positive. He didn't lose any money. He's using his free cash flow as weapons, guys, as weapons to win this war against who really? I mean, I don't know who really is in the same ballpark when it comes to full self-driving and autonomy. People, detractors would say, they look at Waymo, look at Cruise. They're the ones that have, driverless cars. Look at Mercedes. They're the first person to have level 3. I understand, but I don't agree. Let's get back to the chart. So looking at the chart of Tesla, and we kind of figured this price action out, right? They didn't exactly follow our idea, but the general concept remains, is that you're trading within a triangle, and you can see the triangle is just respecting the triangle that started at, when the sell-off from last quarter's earnings stopped. And it made this trend line by bottoming in September, and now we tested that trend line kind of around this morning. So this is kind of what we expected. And I did not modify the red line, guys. You can see the red line is what I drew last week. And so it just kind of makes sense. So I always want to caveat, again, the caveat is, I don't know how price action is going to work, but you can kind of guess when a direction is chosen, where it will stop, where it wants to go, etc. And you want to maintain bullishness, right? So if you want to maintain bullishness because you don't know what the earnings are would be, like why sell off if you don't know, or if you don't have any hint? I mean, that's why you find buyers here, because it's not even at 245. It's just kind of near that triangle. So it's not even near a strike point necessarily. But there's no reason not to be bullish yet. And you can break down below when you have this, this hint of reality, but the reality is no one really knows what those financials will be like. And so it's a perfect pin that it's in the middle still. It's going to be Wednesday. It's going to be in the middle of the week, and you've gone nowhere. You don't have any bias to either side of the EM. So what they're saying to the market, saying to you is like, we're not going to give it to you easy, right? There's no easy way about this. Like, for example, if for the last 2 days we sold off and we're sitting, around 235. Well, yeah, I mean, it would make sense that a lot of people would, find going long much cheaper, and that, and since it's so low in the in the EM, that a move upwards just makes more sense from a statistical point of view. But we're dead in the middle. It's not easy. This is in the face of, ongoing conflict. This is in the face of price cuts. This is in the face of interest rates. So, yeah, I mean, it's really interesting, but not surprising that we're just kind of here. And when it comes to where it's going to go, I mean, no one knows, but let's talk about momentum. When things start going bad, Tesla just keeps going. It just keeps going bad. And this is just the reality. So this is July of last quarter, and this is when earnings came out, and it dropped something like 4%. Now, there are people that said, yeah, like if you look at the EM, it's around 4.7% for the week. But man, you could say that all you want. But if the earnings come out in the middle of the week and then it drops 4%, and then it keeps selling off. I mean, within less than 2 days, that 4% drop became a 15% drop, right? I mean, or a 14% drop. And so you kind of understand why I think for my EM, I kind of wanted a really large, 11, was it 9%, 9.5% plus or minus on the week, because we're flat for the week, and there's a real good chance that, this could get ugly real quick when it comes to, having lower production numbers and delivery numbers for the week. We're seeing output from Austin being quite sparse over the last couple of days. It's not overly impressive. You're not seeing a lot of Cybertrucks. You're not even seeing a lot of Model Ys, right? So I don't know if this is they're still kind of tweaking the assembly lines for these vehicles, possibly. But we're also not fully ramped up in Shanghai, even with a new model. So kind of understand that there is a lot of lagging effects when it comes to introducing new models. We can talk about all the efficiencies that they might be seeing on these lines come maybe Q4. That would be fine. But the initial couple weeks and couple months after you redo everything, you're just not going to be that efficient, and you're not going to realize if there was even a cost of goods reduction, you're not going to realize that in a couple weeks. That's just not reasonable. Ironically, the pricing where we're at now is where we kind of bottomed for a couple of days from last earnings. We really went nowhere. I mean, we just went nowhere. This has got to be one of the most ridiculous consolidations that we went through. And you can see, look how tight this is. Let me move this out of the way. Look how tight this triangle is. This is setting up for a breakout that will be, a breakout or a breakdown that will be destructive. Just destructive. It can, and whoever, if you're mispositioned, it can get nasty for you. But yeah, look, just look how we're just here for so long. And it's just to remind everybody what we're dealing with, a consolidation. This is we're getting super tight. This is almost picture perfect when it comes to people drawing patterns. If you don't believe in patterns in stock price action, I got it. No problem. No, I got you completely. But this is tight. This is 134 days of going nowhere. And we thought during here. So here's another triangle. You can see how this triangles kind of work when it comes to Tesla. And this one breaks to the bottom right. But this one, we thought this was long, guys. We were sitting there from, the end of January until the end of spring, almost the beginning of May, for 83 days. This is 50% more than that, guys. And we've gotten nowhere. But the pattern is perfect for a ridiculous move. You can see it the other way too. When it goes up, you can see how this kind of pattern breaks to the upside. And there's no direction as to, we don't know the direction, but we can kind of try to understand where pricing wants to go and where pricing will stop. And let's look at that now. So what do we want to know? We want to know, the first thing is, if we're going down, where do we stop? There's obvious levels that could be, room for support. And it could be one of those crazy things, even today. Today was an amazing reversal. I don't know if you guys got this, but, I did because, I drew the chart, obviously. I went long here, around $248 a share, and I rode that all the way up 3.6%. And it's an amazing move. If you had buy orders around 247, you realize basically almost, if you got out of the trade, you would have realized almost $10 a share, right? But if you stayed in the trade, even that was still really, really good. Really an amazing entry for people who weren't positioned for earnings and they wanted to go long for earnings. That's an amazing entry, because if you buy an option for $100, it goes to $200. You feel good about it, because if you lose 100, whatever. You got a great discount on that. And plus, okay, I don't know if that's really true, if you got a great discount on it, because it can be worthless even if the stock goes up tomorrow. But you know what I mean. At least it gave you an opportunity to enter cheap, right? And so if you're watching my chart, if you had the same lines drawn out, if you had the same kind of pattern drawn out, this would tell you okay, if we're getting here, this is where I want to go long, right? Because this is this is the bottom. This yellow line represents the bottom side of this ascending triangle, right? And we were hopefully going to find support kind of in that area, and we did. Makes sense? Makes sense to me. But okay, where does it go? The first thing I want to do is kind of understand a reasonable move from this point. Let's say the move is anywhere from 4 to 8%. What does 4% look like? So this is numbers that I want you to understand. If you see around $243 a share, that's a 4% move. If you want to know what an 8% move looks like, 8% move would be, $235 a share, $235. And that gets you to the point where you're at this green line on our screen. Now, this green line represents a longer term trend line from the beginning of this year. Let's zoom out so we can know what we're talking about and remind ourselves. So here's our green line. So these trend lines only are respected if there's this effort by the market to maintain, quote, a bullish structure. If they want it to look like it's bullish, or if they want to defend a bullish trend, then they will buy at this trend line. Has it broken down from this trend line before? It has. There are trend lines that have been broken, be it the SPY, be it QQQ, that have broken from the beginning of the year. So their trend lines are broken. It kind of gives you this idea that it might feel like for the past couple of weeks that, we're not going anywhere, the stock isn't going anywhere, but you got to realize it's floating, right? Where other tickers are not doing so hot. And there are some days when it's down 2% or 1.5 or 2.5%. But just realize from the overall, look of the chart, you haven't threatened the major trend line yet. Now we can look at, we can try to compare this with the S&P 500. Let's see if I can find a good trend line for the S&P 500. And you can see that if we, go from the bottom of March, it kind of broke down already, right? How about another trend line, which would be the from the October low, and you saw it during the last 2 weeks from the October low hitting the low in March, creating the upward trend line that it's very similar to Tesla's. It's already broken through that, and ironically, when it came back above it, it found support off of it. That's just how charts kind of work. But so Tesla didn't even break its long-term bullish trend, where even the stock market as a whole did already. That kind of says something, right? That if the market was to sell off this stock, maybe in the first go, let's draw a line. We'll draw 235. So we'll take that and have a 235, and it would be like something like this. And it kind of puts you at this level near the green trend line. And that would be that 8% move to the downside. So we'll draw it. We'll draw it on this slightly. If we're to sell, I think you would try to find support at the major $5 increments, and then kind of base something like that. And that would be in kind of one of those worst case scenarios in a very short term amount of time. And I'll actually change our old line to green. But what happens if things go well? Like if things go well, where do we go? I think that's something that's been really defended a lot is, number one, of course, the top side of the triangle, but also 270 in general. I think it's going to be a tough go for us. You saw some, pretty swift rejections as we got to 269 before in the last couple of weeks. I'm not sure if we can get past it, but let's just, number one, just check from percentage terms. Like if we were to get to 270, which would be a 5.4%, that'll be like a 6% move. That will, getting past the highs of this beginning of October when there's a lot of resistance in this area, that would be very, very bullish, obviously. A 5% move to the upside, I think that's very reasonable. So we'll just draw our green line that if things go well on Wednesday night, maybe you have some indecisiveness and then up, something like that. Right? Like that would be pretty reasonable. That would, let's see, by the end of this line, which would be a week, a 4.6% move. But let's say things go crazy bullish. The obvious thing is where you want to look for is 280 and the gap fill at 290. So what would those, okay, just for fun, what would that move percentage-wise look like if you were to get to 280? Firstly, that's a 10% move. And if you were to get to 290 to fill a gap, that would be a 14% 14% move. I mean, we've seen stocks move 14%. I mean, that's not unreasonable. What does it take to get to 14%? Like, we know that you need Wall Street to buy your stock. As much as we tout the idea that, Tesla has 45% retail ownership, I got it, I understand. But you need Wall Street to buy your stock. And Wall Street can only buy your stock if what? That the fundamentals of these financials improve, meaning that your operating margin improves, that your auto gross margin improves, or you're realizing a new industry that's churning out much more revenue, like energy, that's coming through really, really well. Or if some great Cybertruck news come out, Elon starts to call off, guess what, guys? Cybertruck's coming out, and I know no one believes this, but it's starting at $49,999. You're like, oh my God, I need to buy this stock right now because that's incredibly affordable. Or like, guys, Cybertruck's coming out and it's going to be, we're doing the release in the first week of November and we're going to have, 3,000 trucks ready to go by then. And you'd be like, okay, I need to buy the stock immediately right now. And you can easily foresee Wall Street jumping in at that point because they don't care about, full self-driving. They don't care about the robot. They just don't care about things that are really cool to us because they don't think we're making any money on that. And it's very likely true. We're actually probably losing money on all of it because it's not realizing a lot of revenue just yet. And think about, full self-driving. Well, Mark, people are buying full self-driving right now. You can sign up for a subscription or pay, $10,000 for it. Understood. But at the same time, Elon is now spending, billions of dollars building out computers, servers, and buying GPUs. So I think that easily eats through all the full self-driving gains that we've seen so far. But a Cybertruck that's really affordable, a Cybertruck that's ramped up really quickly, a Cybertruck that's coming out sooner than expected, or a Cybertruck, projected manufacturing numbers for 2024 are going to be like, I don't know, like 500,000. Those are things that would really move the stock because fundamentally it's going to affect how much money they bring in. It's going to take market share from other companies, and we're seeing the effects of that already, and the Cybertruck's not coming out yet. So conservative moves to the upside, maybe 4 or 5%. To the downside, you want to see a defense at the long-term trend line. And if you don't, obviously you're going to have a touch towards the lower EM for the week. That's going to be devastating for everyone. I'm sure that's like almost $28, $27 a share. That would be terrible. But like I said, other stocks have already broken that trend line and came above it, right? Is it Tesla's turn to do that? I think that if you see it happen and you already know that, okay, S&P 500 on Thursday morning is kind of hanging in there. Tesla's the one that's selling off. The S&P 500 regained its long-term trend line, close above it, bounce off it, close above it again. And that's what you would want to see from Tesla, that you have a severe sell-off, right? I don't know how long it'll take you to get there, but let's say you drop 11%. What you want to see is, you want to see it come back up from that point. If you're not positioned for Tesla, maybe that's when you get long. Maybe you're saying to yourself, this is my opportunity. We're at the bottom of the EM. But we also just have to have that idea that, look what happens when the news is it's very brutal and you don't get a lot from Elon or the company to really buoy the stock. I mean, I think communication is sometimes lacking when it comes to that area. Especially, other companies would talk up their company. Other CEOs would talk up their company. And I understand why Elon might not do it because, what is he going to talk about? Like new products? If he talks about new products, all that means is no one buys his current products, right? If he's going to talk up, we're going to have a new Model Y come out. We're going to have a new Model 3 come out. We're going to have a Cybertruck come out, and we're going to have the next generation vehicle. Then no one's going to buy a Model 3, right? So it's hard, but you'd wish that the CEO would try to talk about it. But we've seen it drop 70% last year, and Elon would send emails to his employees saying, "No, don't worry about the short-term volatility of the stock," because he's lived through it. He's lived through every single one of these dumps and every one of the pumps, and he knows that they come back down immediately right after. Right? We know it ourselves too, that it's hard to sustain upwards movement in Tesla. For what reason alone? Because, a lot of the valuation in Tesla is all this forward-looking stuff, and they're not just realized yet. And to really sustain that move up, you're going to have to start bringing in more money. And we can hope that happens in in this quarter. Like I would be super surprised with a, let's say, auto gross margin of 18%, operating margin of like 10.1%. That would be really surprising to me. That would be amazing. But when it comes to earnings, I would say, as just to be responsible, playing earnings when it comes to like trying to trade through earnings is really, really a gamble because you don't know what's priced in yet. And what do I mean by that? If I was telling you that the price of Tesla is remaining buoyed for a long time in the face of other, even just not even other tickers, I mean, the whole stock market selling off and Tesla was like, I'm not going anywhere. I'm actually going up. You know what I mean? Like it's going up. We're not going anywhere. That's kind of telling you something, right? That something is keeping it up, but it wouldn't be a shock if what was keeping it up are hedge funds and traders who are keeping the stock up, trying to be positioned for the Cybertruck move. And if it doesn't come out, like tomorrow night, if you hear nothing about Cybertruck, do you think this stock was buoyed because of retail investors? This was helped by institutions. And if they want to get rid of their stock because they didn't like to hear they didn't hear anything what they heard, they have, like, if they were entering over here, right, they have like a $10 per share, margin of error to get out and not lose any money, right? And so that's something to think about. They can easily get out and get out as quickly as they can if they don't like what they're hearing, right? Just remember, like, we've been much stronger than a lot of other tickers because flat is strong. Flat is strong. All right, guys. What else do I have to talk about? Oh, I had another. I don't think this really matters. When it comes to news, when it comes to Tesla, a lot of the news isn't really that interesting to me. Like, this is the news that came out, which is from Electrek and really from anyone on Twitter. BMW adopts NACS, which includes Mini, Rolls-Royce, and BMW, of course, as well. That's great. I mean, I don't know what to do with that information. When it comes to price action, that is not really interesting to me at all. But maybe to some people, it is. All right, guys. Thanks so much for listening, and I wish everyone luck tomorrow. Maybe we get some interesting entries in the morning. Maybe something happens overnight and the market sells off and makes an easier. But I hope we do well. I hope we just fill all the gaps and then we just go right to $290 a share and just call it a day and go to sleep really well. See you guys. Bye.